Okay, touching base with another management, and we have Shekhar Bajaj, who's the CMD of Bajaj Electricals, joining in to talk about how business is shaping up for them. Mr. Bajaj, it's great to have you on the show. You've bagged a sizable chunk of orders from UP, but analysts see execution risk and aggressive pricing in the recently bagged orders and higher than estimated rise in working capital requirements. Do you believe this will remain a concern in your expansion plans?
Two, three things. As far as this order is concerned, though the order is for 5,000 crore, when we have done the actual survey, we think many of those low-cost houses do not exist, and therefore the order may be brought down to maybe 3,000 or 3,500 crore. That's one. Second, in terms of aggressive pricing, we still have priced it at a normal EBITDA level, which is 7 to 8%. We have not priced it below that, so therefore those are the type of numbers which we can still expect out of this order, whichever UP order. Now the UP order also in terms of time is very tight timing, but we have looked at it and we said that we should be in a position by partly this year and most of it next year should be completed, and therefore to that extent it will give us a substantial boost in terms of our turnover and bottom line.
Although you've targeted only 2 to 3 orders with aggressive pricing, Mr. Bajaj, you have won 16 power distribution orders to electrify villages. Tell us more about the recent order wins.
See, actually what you are saying is absolutely correct. Our order book was going down, and we are finding that we are not having sufficient orders for our power distribution for rural electrification, and therefore we quoted now in tenders. You don't know how many you are going to win. We were hoping that we'll win 4 or 5 of them. We ended up winning 16 of them. So that is something which is not known how others are going to quote, and therefore to that extent we got more than what we were looking at. So therefore to that extent it's a very challenging thing to do it, but we are confident that we should be able to do that, and that will give us a different trajectory. That means we will show our capacity and capability that we can take up bigger challenges for the coming years.
Okay, so Mr. Bajaj, tell us about the total order book at hand, and where is it that you see your targeted order book by the year end?
See, as far as power distribution is concerned, where we've got this order for next 2 years, we are not, at least next 12 months or 18 months, we are not looking at any new orders. We are not quoting for any new tenders, because this is sufficiently to keep us busy for next 2 years. As far as other businesses concerned, whether it's illumination or it is transmission line tower, there also we got good orders, but we are still quoting for them because we have capacity to do little more. So overall the order book is over 8,000 crore, and we are hoping that most of it should be as I mentioned, that 8,000 may end up at about 6,000 crore order book, so that we should be able to cover it in this year and maybe by next year.
I just wanted to understand it in greater detail. Let's talk about the consumer products business then, Mr. Bajaj, because that has seen initial signs of a recovery with a 15% volume growth that you clocked in the 4th quarter. Do you hope to better this performance in the future quarters to come?
Personally, I think yes, because basically now our distribution is in place. We've covered 160,000 outlets which we are servicing on a weekly basis, which we want to increase it to 200,000 outlets, and therefore consumer product, and especially with the government thrust and the money available in the rural market where our distribution, we are covering almost 500 districts, and with that coverage we should be able to show a better growth than we've shown in the 4th quarter. This is my personal feeling. First 2 months have been good. Let's hope June also turns out to be good. So we should be doing for consumer product better than the 4th quarter.
And your target to regain the market share loss since RREP implementation over FY19, FY20. But analysts believe gaining market share is not going to be easy, for competition has intensified. How do you plan to address this concern?
See, personally, I think the whole game of India is distribution, and therefore I don't think any other competitor has the type of distribution that we have created in the last 2 years. We have taken a market hit and market share hit, we know that, but now that the markets are established, our distribution is in place, in spite of competition, I think we'll be able to gain back a market share. It may take a couple of years, but clearly we'll grow faster than our competitors. That is something which we are very clear.
You were losing T&D orders over the past 1 to 2 years, Mr. Bajaj, as we understand, because of conservative pricing and adopted aggressive pricing approach in the recent tenders with the target of winning about 2 to 4 orders. What's the outlook then on the EPC segment growth?
So EPC segment growth is because of these new orders that we have taken. Next 2 years there will be substantial growth, because if we don't do this orders in time, there are LDs and other issues coming. So there is no alternative but to have substantial growth. 30–40% growth also is quite possible as far as EPC is concerned, because we've got orders which we have to execute. After that, as we start executing, we will see how we'll go about in the future years. But one thing is very clear, that EPC should give us a good turnover and contribution in the next 2 years, this year and next year.
Gross debt has increased by 7,300 crores in FY18 with increase in EPC revenues, and is expected to increase further by 250 to 300 crores in FY19 on execution of the UP projects. What is the outlook on debt management?
See, totally we are looking at a debt equity capital, we are rotating it 3 times. So our real requirement for, suppose we do an extra 1500 crores, we would need additional 500 crores of capital, but 200 to 300 crores will come out of EPC business alone. So maybe we need an additional debt of about 200 to 300 crores extra, which is substantially going to come out of our consumer business, where we don't really need much of cash. So there is no cash flow issue at all for executing these orders.
All right, Mr. Bajaj, we leave it at that. Thanks very much for joining us and giving us more details about your business plans. We really appreciate your candidness.